If you're thinking about purchasing Tesla stock but aren't sure if it's a wise decision, you're not alone. Experts disagree on the matter. On the one hand, Tesla has revolutionized the auto industry by controlling the market for electric vehicles and forcing legacy automakers to compete for market share on the other hand. Some investors have doubts about the company's future technologies and CEO Elon Musk's credibility. Given that the stock topped volatility charts in 2022, you could be forgiven for having some reservations, but don't make up your mind just yet, because there's more to the story in a recent series of tweets. Elon Musk disclosed that Warren Buffett, the Oracle of Omaha, had the chance to buy Tesla stock in 2009 through his investment company, but he passed up one of the greatest opportunities in history, a choice he now regrets. Elon has made clear that he wants Buffett to invest in Tesla and imagine what would happen to the stock price if Buffett heeds the call. So let's dive into the details and see what's going on. But before we get going, smash that like button and subscribe. The price may be looking better now, but at its lowest, Tesla stock declined to around $108 per share. Tesla's stock price declined to $108 may have been due to market fluctuations, CEO Elon Musk's controversial behavior on social media, production issues causing delays and quality control problems, and increased competition from traditional automakers. Entering the electric vehicle market, these factors may have contributed to a loss of investor confidence in Tesla and impacted its stock prices, although it's possible that other factors may have also played a role. And because of that, legacy automakers are in a race to release their electric vehicles, challenging Tesla's hold on the industry's future. But in spite of the bears' persistent assertions that Tesla is exaggerating the potential of its future technologies and that CEO Elon Musk cannot be trusted, the company has experienced tremendous growth in recent years. Not only has celebrity investor Cassie Wood been a consistent buyer of Tesla stock in recent months, with her most recent purchase occurring on December 15th, but many believe that Warren Buffett's Berkshire Hathaway has been amassing substantial position in Tesla shares. Despite being one of the most sought-after stocks in the past 10 years and an innovative pioneer in the electric vehicle EV industry, at least one prominent investor has not yet expressed interest in Tesla. Warren Buffett recently, Elon Musk took to Twitter to explain that if Buffett and his investment firm Berkshire Hathaway had invested in Tesla in 2008, when the company was only worth $200 million, that would have made a substantial profit. Today, Tesla's current market value exceeds $600 billion, and it reached $1 trillion in October 2021. And again in March of last year. Must mention that during a launch in late 2008 with Charlie Munger, who was Warren Buffett's right-hand man and vice chairman of Berkshire Hathaway. Munger could have invested in Tesla at a valuation of about $200 million. Must previously mention that Munger had predicted Tesla's failure during a lunch in 2009. Despite agreeing with Munger's reasons, Musk still believed it was worth attempting to succeed, and we all know what happened afterwards with the company surviving bankruptcy multiple times and becoming arguably one of the top investments in human history. So, is Buffett ready to make amends for leaving billions on the table for his investors when he passed on Tesla, despite CEO Elon Musk's optimism about Tesla's potential for continued growth in vehicle deliveries at an average rate of 50% per year, and the fact that the company currently has the highest operating margin in the auto industry? It appears that Buffett has not been buying Tesla stock with enthusiasm. This may seem surprising given the bright future for EVs, but Tesla's shares had at one point in January declined by almost 75% from their peak. One may assume that Warren Buffett's lack of interest in Tesla is due to being outside his area of expertise. This may seem plausible since the renowned investor has famously avoided investing in several major tech stocks in the past due to his lack of understanding of their businesses. However, I believe we can dismiss this notion as a reason for his reluctance to invest in Tesla. For one, Berkshire Hathaway's investment managers Todd Combs and Ted Wessler have helped broaden Buffett's investment horizons. This is clear from Berkshire's portfolio, which now includes stocks like Activision, Blitz, Desert, and Snowflake. Additionally, last year, one of Buffett's largest purchases was Taiwan Semiconductor, so the fact that Tesla is a tech company shouldn't be a deterrent to increasing its investment interest. Although Berkshire has never invested in Tesla, as of the end of 2021, the company owned $2.2 billion worth of shares from General Motors Company and $6.1 billion worth of Chinese electric car stock ADR from Bide Company, suggesting that Buffett seems to believe in both of these companies. According to a statement issued by the Hong Kong Stock Exchange, the conglomerate sold an additional 3.2 million shares of Bide last week, increasing their total number of Bide shares to 15.99. People closely monitor what Warren Buffett does with his wealth, and he is often considered the most successful investor ever. In 2008, Berkshire Hathaway purchased stock in the Chinese manufacturer of electric vehicles, Bide. Although Bide was a little-known firm at the time, Buffett recognized potential in their cutting-edge battery and electric car technologies. With a market valuation of more than $100 billion, Bide has now expanded to rank among the biggest producers of batteries and electric vehicles worldwide. In fact, Biden's success in the electric vehicle business has made it a rival to Tesla in some areas. Buffett's stake in Bide has been viewed as evidence of his long-term investment philosophy and his faith in the potential of electric cars. In an interview with Musk in 2022, this sparked a surge in reports that Buffett was selling his Bide shares to buy Tesla stock instead. Buffett gave the Tesla CEO high marks for his achievements. On the other side, Elon Musk has made it clear that he doesn't admire Warren Buffett on a number of times, calling his work incredibly boring and ignoring his investing advice. When asked if he would consider putting his many ventures under a parent company like Warren Buffett's Berkshire Hathaway during a recent Tesla earnings call, Musk reportedly responded, "I'm not Warren Buffett," according to Fortune magazine. Elon Musk, the CEO of the boring infrastructure company SpaceX and the electric vehicle manufacturer Tesla, said he prefers designing and developing new products to accumulating a portfolio of investments or engaging in other similar endeavors as the richest person in the world. Musk stated that he wanted to keep his several businesses separate, saying that he wasn't sure what overlaps might exist, according to Fortune magazine, as reported by CNBC. Previously, Musk has defied Buffett's advice to investors to put their money into businesses with significant modes of operation or competitive advantages. In 2018, it was widely declared that moats are meaningless and that innovation speed is what matters. Buffett gave a scathing response to the obligatory reply. Elon might completely upend several things. In reference to See's Candies, the business he acquired in 1972, he stated, "I don't think he'd want to take us on," and Candy, ultimately Berkshire, has not offered an explanation for the sales of his BYU stock, which has led some to assume that the key stockholders are departing. In a string of tweets, Christopher Dungeon claimed that there is a 25% probability that Buffett and Charlie Munger had been covertly buying Tesla stock for Berkshire Hathaway. This subjective probability is based on Dungeon's personal opinion and assessment rather than a rigorous mathematical computation, which holds that a small-scale accumulation of less than $1 billion. He shared some of his thoughts and theoretical justifications for the topic, pointing out that Charlie Munger had recently commended Tesla and its CEO Elon Musk in February. Elon Musk tweeted that Charlie Munger of Berkshire Hathaway had told lunch guests that all Oasis electric vehicle manufacturer Tesla would fail. Musk had previously criticized Tesla in January. "I remember having lunch with Munger in 2009 and being quite depressed after. Listening to him outline all the reasons why Tesla was doomed to fail in front of the entire table." Munger, the vice chairman of Berkshire Hathaway and a longtime Musk critic, had previously been outspoken about his concerns regarding Musk's behavior on social media and his propensity to make audacious claims about Tesla's future projects. There is no official confirmation that the two discussed the problems in a private conversation, although it is plausible that they did. According to Elon, he comforted himself by telling Munger that he agreed with his assessment and that even if Tesla was probably going to fail, it was still worthwhile to attempt. You got that right. Elon, it was worthwhile to attempt, and as a result, the world is a better place. If you enjoy this video and this Tesla content, please hit the like button and subscribe music. We appreciate your time and hope to see you in the next video.